Hello traders, welcome to Market Edge, ahead of the trade.
Energy. Weekly charts on the left, daily on the right. What looks like so-so in one time frame might look better in another one. You can see, well, there's a ton of overhead supply in the weekly. There was a big gap down here, big drop here, and a big gap down where it closed near the lows on volume. It's a little bit below the 50-day. Okay, there's a spot here, but there's not a lot of accumulation in it. It'd be very aggressive entry. And again, this big gap down right here on volume is a warning sign. There's cleaner things to buy. We stack the deck in our favor. I'd stay away from it right now. Let's move on. By the way, this is sorted into by alphabetically, just so you know. It's not relative strength or anything else or accumulation distribution rating. FDN, Dow Jones Internet. This one's steadily picking up. Then you can see it on the weekly. You can see it on the daily. There's no real clean entry in it here, okay? It is going up and volume's starting up, volume's picking up. But that does tell us something. Oh, maybe we should look into some internet stocks. We have, and we did, and we bought some. It was telling us to. There we go. We systematize. It really helps. IBD 50 starting to show some strength. You can see it right here. And so, yeah, we own some growth stocks. We bought some growth stocks. It was telling us to. We've owned some growth stocks for a while, by the way. Now, look at this one. I'm going back. Oh, that's kind of picking up, trending up. This is the 8-period exponential moving average. There's a tremendous amount of research in that moving average, folks. I was using that in the last century. It works, let me tell you. Trending, strong trends. Gold miners. Now you look at this and you go, gosh, this thing's below the 50-day. Do a compare and contrast. Well, this is kind of going up. This ain't doing nothing. What does it say? Stay away from gold miners. What, might bounce? I don't want to play the might game. I'm looking for stuff that's already strong and looking for a spot to get in it and run it. Nothing really here, just leave it alone for right now. And you can guess the same thing's true with GLD. Kind of languishing. I mean, it's on the 50-day, but there's some selling going on here. You can see it on the weekly. You can see it on the daily. Be a little careful with gold. Cybersecurity's picking up a little bit. Small cup and a handle right here, not a lot of volume, but it does tell us something important. Cybersecurity stocks, cybersecurity industry group is picking up. Maybe looking at some stocks in the cybersecurity area. You could punch up hack, okay, on Google, top 10 holdings, hack, and it'll come up for you. I don't see anything really great to buy here in this chart, but it is improving and I like that. Continue onward. Biotechnology. What does this tell us? Compare and contrast. Well, this is kind of going up. This is below the moving averages. There's nothing there. Leave it alone. Buy strength. It'll help you. It's not there. We got to wait. Online retail picking up. By the way, you can always see the name right up here, just to let you know. Online retail. Gosh, what's an online retail stock? Yes, Amazon. Yeah, we own it. It's working. And it's trending. This was telling us, hey, the industry's strengthening, something to look into. So that's a group to maybe look into more. Software technology. Look at this, our technology software. Picking up. What's it been telling us for a while? Hey, look at the weekly and the daily. Hey, maybe looking at some software stocks. Yeah, it's not forecasting. It's showing strength. Looking at some software stocks. Yeah, we have, and we own some. There you go. It's nothing fancy. I love that. IHI, medicine's picking up a little bit also. What have you seen here so far? Well, it looks like the rally's spreading out into other groups. Yes, the market is not a one-trick pony right now. It's telling us the strength is spreading out. That improves our conviction on buying and hanging on to some stuff. Excuse me? Sorry about that. I wasn't kidding when I said we lost everything for a while. Power and internet and pullback. IJH is picking up. Again, I apologize for that interruption. I'm surprised that Google won't pick that up. But anyway, it's picking up here. So mid-cap stocks are improving. Looking at some mid-cap stocks. Continue onwards. Aerospace and defense is strengthening. Look at the trend here on the weekly. It shows some strength. Is there any clean entry in this right now? No, it's too extended and there's no base here. There's no pullback. There was a pullback set up right here. There was a base right here. Okay, but it's just extended. But it does tell us there's strength in the group. We like that. Home construction's picking up a little bit, but man, there is a ton of overhead on the weekly. Be careful with that, okay? Just lots of overhead supply all through here. That means every time it goes up, it's going to be met with sellers. You think I'm kidding? Well, look what it does here. It gaps up and they take that baby right back down. So just be a little cautious there. S&P 500 growth stocks, big growth stocks. Think MAXLIST. We own a bunch of them. It's working. Continue onwards. Small caps spreading out, still here below the big weekly moving average, okay? But it is improving. That's good. I need to pause here and share something. This is important. I'm not a cheerleader, like rah, rah, bye, bye. No, I'm very pragmatic. I had to be. For those that don't know, I was the sole support of a family of 6, living off investing profits only. You say, yeah, but you inherited a lot of money. Oh, no, I didn't. And I'm not complaining, I'm just, no, it wasn't there. My dad died when I was younger, so it was life. Here we go. And I help support my mom. Here we go. IYR. Real estate's picking up. It's got a decent base on the weekly or in the daily, in the weekly, but there's a lot of overhead supply. And notice there was some distribution in here. The red selling bars, red volume bars, not a lot of accumulation on the weekly or the daily. It just says be a little cautious with the real estate. There we go. Continue on. Transport's picking up, improving. That's nice to see. Airlines picking up a little bit. That's good to see. Banking, basing right here, but it's showing some strength. What's the common theme here? How many times have I said, it's picking up some? It's picking up. It's improving. Isn't that what we want? Yeah, for sure. And that guides us to say, yeah, maybe we should look into buying more stock. There we go. Admission winners, we don't forecast, folks. We let price and volume action in the stocks tell us what to do. And the ETFs help too because it gives us strength in, sites in industry groups. Insurance is picking up a little bit. That's good to see. Look into that. Regional banking gapped up and it's forming a little handle right here. Doesn't look too bad. Basing right here. Mid cap. Look at this thing. It's turned. I mean, we avoided all this crud here, folks, on the weekly and the daily. We weren't involved with any of it. Then it starts to turn. And yeah, do we own some mid-cap stocks? Yes, we do. It was telling us to. No forecasting, just watching what's happening. Oil services is picking up a little bit, but it's still kind of lagging. This needs to get above the 50-day. Here's a powerful lesson for you. So, boy, that's a good bar right there, Pat. It gapped up, it ran up, and it reversed below where it opened. It was met with selling, folks, and it did it on a pickup in volume. It was met with selling. What does that tell you? This is a great chart reading analysis. It needs to take out the tops here of the 50-day and do it with volume. But no, tons of overhead supply here and serious selling on the way down. Look, big gap down on heavy volume. Big gap down on heavy volume. You got to be careful with that, folks. You said, but that's a good bar, Pat. Note the buying volume on this bar versus the selling volume on these 2 bars. And the selling volume on it goes up and they slap it right back down again. So be a little careful with oil services. That's $1 million lesson right there. Pharmaceuticals, they need drugs, not a lot going on there. QLD, NASDAQ 100. Folks, I will tell you, watch QLD and SSO every day. It will guide you on big picture money, where it's going and where it's leaving. QLD gapped up and steadily trending. What do we own? Do we own some NASDAQ 100 stocks? Yeah, it was showing strength. Sure. No forecasting, let price and volume guide us. QQQ, same situation. Retailing's picking up a little bit. Looking at some retail. Cloud computing's picking up. You can see. And it's trending up the ADMA. I need to pause here and share something. Ed Secoda had a profound impact on me. I met him decades ago. What a guy. Changed my life. As did Bill O'Neill and a few others. Martin Zweig. How about that? Met him a couple of times, had some good talks. And I'm not name dropping. I'm just grateful that God put some of these people in my life and they helped me. This is just trending up nicely. Good to see. Share a quick story with you on Ed Secoda. I was at a conference in California. We were talking back and forth, and it was so intriguing. Every time I said something Not every time, but frequently when I made a comment about market action or stock action, he'd tilt his head back and look at me through his bifocals and say, why do you think that is? And he wasn't being a jerk. He was challenging me to think it through. Why do you think that, Pat? Defend yourself and your thoughts. And it helped me be a better investor. I'm thankful to have met him years ago. What a man. Okay, here we go. Silver's just basing here, not a lot of power there. Steel's kind of basing, doesn't look too bad. Semiconductors picking up, doesn't look too bad. Just flying through here, semiconductors picking up. Spiders, look at that move there. Yeah, are we involved in things like this? Yeah, some big stocks. You bet. It was telling us to. Same with SSO. Solar, look at that lift in solar. Now, big lift on the daily. Still a ton of overhead supply on the weekly. So what's the best thing this could do? It'd be nice. It's had a fast move here. If it could base for a couple of days and then take off more, that could be a potential buy, or look into that industry group. Small caps still kind of lagging here, okay? I mean, that's lifted up. It's still underperforming. Not a lot of power there. Be careful with that. Oil services is lagging. Be careful. Aerospace and defense. You can say, well, that's just kind of going up and not a lot of power. Oh, look at this. This broke out of a bank. Gee whiz. It was leading, and it has been leading. What did that tell us? You could punch up XAR and find some stocks in that group. Or when it was doing it back here, you could have pulled up XAR, top 10 holdings, XAR, and it could guide you into some stocks in this group that made moves. And I guarantee it, there were some stocks in this group that made a move. You can say, how can you say that, Pat? Because if they didn't, this wouldn't have gone up in price. The industry. Here we go. Biotechnology. Compare and contrast. Kind of going up like that. Hey, doing nothing. Really nothing, not too great right now. Be careful with biotechnology. Home building's picking up a little bit. A lot of overhead supply there, though. So just be a little cautious with that. OnePlus, though, notice what it did. It gapped up on good volume here and a good volume pickup and good price action on the weekly, too, in the home builders. Something maybe look into further. How do you build houses? With materials. That's improving a little bit. Communications, technology related, steadily trending up. That's good to see. Energy going up a little bit. Some improvement there, okay, but not extremely robust. Financials picking up a little bit. Like to see financials picking up, folks. That's a great investment proxy, investing proxy. How are the financials doing? They're hanging in. Industrials is going up. That's nice to see. Technology's having a good run here. We're heavy in technology. Good. Consumers picking up a little bit too. I need to pause here, please, and this is important. I'm not a cheerleader, okay? Like, go, go. No, I'm not. I'm simply observing, reporting what's going on with no bias. When we get to the point that you let price and volume guide your actions, you will see things much clearer. It will lead to better decision making and more money. And banish this phrase. I said this at the meetups for years. Banish this phrase from your thought processes. Well, it just has to. Well, it just has to go up. No, it doesn't. It will do whatever it's going to do. We simply get in line with it, and that helps. Price and volume guidance. Utilities picking up. That's nice to see. Healthcare's still lagging, though. I mean, look at this. Well, that's kind of going up. Look at that. Oh, that ain't doing nothing. What does that tell you? I'd be careful with healthcare. It's kind of underperforming right here, okay? Focus on strength. Consumer discretionary, steadily trending up. Still some overhead here, but it's improving. Metals and mining, basing, is steadily trending up. That's good to see. Oil and gas lifting up a little bit. Not too bad. Okay. Retailing, pretty good move there. Trending up. One slight negative is recently it's trending up on decreasing volume. There we go. Software, look at that nice move going up. There we go. Are we involved in software? Yes. He was telling us to.
This week's rally had real juice. We kicked things off with a strong gap to the upside on Monday and kept climbing into Friday's close. No backtracking, no pause, just a straight line move. But when the market moves like that, it's easy to forget how quickly things can shift. Underneath the strength, risk, is quietly building. Let's take a look at what's really going on. On the daily chart, the S&P 500 finished the week roughly 130 points above its 8 EMA. That's not a small number. That kind of extension doesn't usually last. The Nasdaq was stretched even more, both in percentage terms and raw points. When price gets that far above the 8 EMA, odds don't favor continuation, they favor a pause or a pullback. The rubber band can only stretch so far before it snaps back. And now, just as traders were heading into the weekend, the story took a turn. Moody's dropped a surprise downgrade on U.S. debt after the close on Friday. Equity markets were already shut, bond markets were closed too, but futures sold off hard the moment the news hit. And that leaves us with a big open question heading into next week. How will markets respond when they reopen Sunday night at 6 p.m. Eastern? That Sunday open is now a focal point. It's going to give us the first read on how serious this downgrade might be in the short term. Will it drive a bid into gold? Will the dollar soften? Will futures bounce back or extend lower? We don't know yet, but we'll be ready. And this is where disciplined traders have an edge. When the indexes are this stretched and a headline like this hits, the best move isn't to chase, it's to step back. When you get an unfilled gap like the one we saw Monday, paired with overextension from the 8 EMA, you want to be thinking defense, not aggression. Gaps like that often act as magnets on the way down, especially if a downdraft kicks in. It's not about panic, it's about probabilities. Price can certainly keep pushing higher, but the edge isn't in betting on that. The edge is in waiting for a reset. Let price come back to the 8. Let the moving averages catch up. Let the setup come to you. And most important of all, don't fall into the "this time it's different" trap. That's where traders get stuck at tops. We don't know how the market's going to react Sunday night, but we do know what the technicals are telling us now. They're telling us we're extended. They're telling us we've run hard without a pause. And now we've got a major macro catalyst sitting out there unresolved. So the tactical playbook heading into next week is simple. Watch the open. Watch how gold and the dollar react. Don't chase price when it's far from the 8 EMA. And remember that the best trades don't come when we're emotional. They come when we're ready, patient, and focused on high probability spots.
We look at Apple. Weekly on the left, daily on the right. What do you see on the daily? Well, you know what I see? I see a cup with a handle formation here forming. If it could take out these tops, this could be one to watch on Apple. AAPL is the ticker symbol, as you know. You can always see it in the upper left-hand corner. What's the high on this bar? The high on this bar right here is 213.94. High on this bar is 214.56. But I'm going to draw this to help you. You can see there's a slight downward sloping trend line. Note this also, and this is trading coaching for everybody. It does not have to be a perfectly flat horizontal line. If it's a slight downward sloping trend line, that is acceptable for buying. But what are the constraints? You need a good market. You need to push through here, and you need to push through these tops here on volume. Again, the high on that bar is 213.94. What could be an entry? 214. That's it. Oh, it's got to be a dime higher. No, it doesn't. But again, the constraints, and I'll say it numerous times in these videos, and it's what I taught at the IBD meetups. We want a good market. The M in Mission Winners comes first. We want good price action on the stock, and we want it backed by volume. Say it again. Volume tells us other people see what we see, and they're buying. There we go. Gosh, I'm watching the news right now. Yeah, there was some tornado activity in St. Louis here. Holy cow. Major buildings ruined. Brick buildings torn apart. Whoa. That's awful. Okay, Amazon. Amazon lifted up here, gapped up. We own this down lower, pulls back on less volume. You see this? Now this bar isn't that bad. It closed in the top half of its range. Take out the highs. The high on this bar is 206.88. The high on this bar is 206.85. You can see, how do you know that? And again, these are, I hate to say tricks, okay? These are tactics that work. Watch the H. The high on this bar is 206.88, 206.85. It's easy. On Amazon, could be an add-on at 206.90. AMZN, 206.90 cents. Now, looking at this chart, this is a relatively orderly pullback. right? And there's not a lot of heavy volume here. This could be not just an add-on, this could be a new buy on Amazon. There we go. But always remember, it's a pullback setup. It's less reliable. How do we control risk? We go smaller. In these videos, I try to educate. AMZN, it's kind of the same thing, but I like Amazon. BABA, gap down right here. Do you know why BABA gapped down? We stayed away from it, by the way, because we knew this one was coming out with earnings. By the way, we know BABA's had earnings also, or is going to have earnings recently, or soon. Look at BIDU gap down on earnings. We didn't buy that. By the way, charts tell us a lot. Just before it comes out with earnings, the day before, look what it does. It gaps up and reverses down on a pickup in volume, closes near the lows and back below the trend line. It's telling you, hey, don't buy me. Don't buy me. Be careful. And we avoided the gap down. There we go. Nothing to do with it. Let's move on. Goldman Sachs is just steadily trending nicely. What do? Just let it work. There was a gap up there. That would have been a tougher entry, but it was a gap out of a clean base on a pickup in volume, and it's just steadily trending. Could there be an add-on here? Yes, there could be. Take out the highs of this bar at 620. I'll make it easy for you. 621. Add-on, not a new buy. Add-on, 621. Add-on. Let's move on. Google gapped up, ran up, clean tops here, and closed down near the bottom half of its or third of its range. It was met with selling pressure. Got to be careful with that. Now, this has got a tendency to do that, and then it takes off. So we need to watch this taking out the highs here at 195.40. It will need a good market and good volume. 195 and 40 cents. High on this bar is 195.35. It doesn't need to be a dime higher. A nickel works. MasterCard has a clean base right here. Take out the top of this bar, 584.30. MA, 584 and 30 cents. And team again. And this is for everybody. In a good market. By the way, good volume on that bar. Look at the volume pickup pushing through that line. People take note of that. There we go. Price and volume talk. Meta, simple base breakout, lifted up, pulls back. You can say, oh, Pat, it pulled back in slightly heavier volume. This is the kind of work that we do. Just because it's a red bar doesn't mean it's a bad bar. Look at the volume that came in here, okay? And look at how it closed. It gapped down, it fell, and it closed at its highs. They didn't sell it. They supported it. They bought it. So this could be a potential add-on, not a new buy, add-on at 640 and 50 cents. META, 640 and 50 cents. The high on that bar is 640.44. Just 6 cents higher is fine. It's a nice round number. Continue onward. Microsoft is steadily trending. There's no real clean entry on it. It's been working for a while. Some VIPs own it. Let it trend. Good work. Netflix made the marks on the daily chart, made the marks on the weekly chart. Simple basis pay. Look at the volume coming into this when it breaks out and then lifts here on good volume. Much better than average daily volume. And note the trend. That is how money is made. We're picking this up. We'll call it a 998. 998, and here's 11. Folks, it's 200 points. Darn near 200 points. Letting it work. That's serious money. That's what we're looking for. 998 to 11. You could say it. 9 right here. 998 to close to 1198. There's your 200 points. There we go. Let it work. Don't add to it here. It's in great shape. NVDA, simple base breakout here and here. And it's working. Let it work. Let it trend. Now, this could be an add-on for the people that own it, taking out 136.40. NVIDIA, 136 and 40 cents. And I said something very important. Add-on, not a new buy, okay? Needs to take this out but it's an add-on. So what's the other constraint? Always remember, and I try to coach in these videos, always buy less than what you own. You never want to pull your average price up too high, and that really helps us. NVDA is the same thing, but I like NVIDIA. Tesla, simple base breakout right here and lifting. Please note, I'm not bragging. I'm trying to educate. A lot of people just give ideas, but they never explain why. I want to explain why. Then you know the concept, you understand the concept, and you can apply it to other stocks. That's power for you. Simple base, good volume here, trending nicely, in great shape. We're just going to let it work. We may add a little bit more, taking out the high of this bar. Add on, not a new buy, add on. The high on this bar is 351.62, 351.70, Tesla, add on. $351.70, add on. And I'll say this again, please, when we're adding on or buying more, we buy less than what we own. Don't pull your average price up too high. And you said that earlier. Yeah, I'll say it over and over and over, okay, to help. Let's move on. TSLA, same situation, but we're in Tesla. That's good. Visa slowly grinding up. What's the sister stock to Visa? MasterCard. That chart's formed a big cup too. Here we go. Take this out, could be a buy at 366.20. MasterCard, Visa. MasterCard's on the key list too. What's the high on that bar? 366.19. So what do? 366.20. Founders Jones Industrial Average. There you go.
That wraps up today's episode. Huge thanks to Pat Walker for another deep dive and to all of you for tuning in. If you found this helpful, make sure to subscribe to Mission Winners on YouTube, check out missionwinners.com, and stay sharp out there. Master your strategy, trust the process, and maintain your edge.
I am here in the middle of nowhere. There is no there, it is cold there, but I am safe and I am